On All About Stocks this week, strong trade on Dalal Street. The Nifty ends above 8,500. We'll tell you if it's time to buy quality stocks. Our investment advisor, Chokkalingam, has made a profit of 123% on his model portfolio. To tell you how you can make similar returns. And Chokkalingam tells you why you should be investing in Coromandel International for the long term. Welcome to All About Stocks. Thank you so much for tuning in. What a week we have had at the stock markets. This is what you call a volatile market. But don't worry, over the next half an hour, we'll take you through everything that happened. It's on your screen right now. We had some big days of moving up and moving down. We're going to answer the questions you had about this market and tell you where you can find value, what you should be buying and what you should be staying away from. Remember, email ID is at the bottom of your screen. If while watching this show you have any questions, feel free to write to us. You can also reach me personally on Twitter. Now let me bring in my colleague Ajay, who will give us an update on all of the action on Dalal Street. Ajay, take us through those big days.
Well, it has been a positive week for Indian equities. In fact, we've ended at highest level in almost 6 days, or a weekly high. The markets have ended positive this week. The broader markets, the BSE small cap and the mid cap, have massively outperformed with gains of over 1%, whereas the Sensex and the Nifty have just barely managed to end in the green. This has got to do with the last 3 days' performance of the week. The commentary from some of the public sector banks like PNB and BOB started aiding the rally in PSU banks. On Friday, ICICI came out with a good set of numbers and joined the rally. In fact, on Friday, the government came out and announced the recapitalization of the PSU banks, much larger than what the street was estimating. That led to a full-blown rally on Friday, and hence we gained weight. Not only that, a lot of traders have cut short positions ahead of the RBI policy meet next week, and there is a growing hope on the street that because of normal monsoon progress and low commodity prices, perhaps the case for a rate cut on Tuesday is only going higher. In fact, even the Q1 earnings progress has been either in line or slightly on the higher side as far as the first quarter earnings go. So that has actually aided the buoyancy as far as the equities go in the market this week.
All right, Ajay, thank you for that update. Joining us in the studio, Chokkalingam, the founder of Economics Research. Chokka, thank you so much for coming in. There's a lot going on. Obviously, there's a lot going on in the global markets. There's also a lot of earnings numbers coming in. That's very interesting. But the interesting piece of information for me was the announcement that came in towards the end of the week that the government will pump in 70,000 crore rupees into the PSU banks. Obviously, there was a reaction to that as well, which we saw on trade in Friday. What does this mean for our PSU banking stocks? Because we've avoided most of them up till now. Is this the lifeline they had been waiting for? Or will they also need somehow better management in order to justify themselves as investments?
I agree with you. This is the time to relook at the PSU banks for a couple of reasons. One, if you see the carefully June results, for many it has peaked out now, the NPA cycle.
Right.
The incremental NPA is now maturing and it's not adding. That is also partly because of poor credit growth. The banks are not lending aggressively the way they used to lend. And second, I have been saying that we are headed for a deflationary scenario across the world, and interest rate has to come down substantially. You can't sit in the island of inflation worry when rest of the world is worried about deflation. Third, I believe that by December you will see some signs of industrial economic recovery. So considering all these facts, one has to bet on PSU banks, but one has to be selective. Not all the stocks are good quality stocks. So one has to look at, say, net NPA, which is around 2%, and also look at whether in the tough times still they are able to grow the credit. The industry growth is now around 9.78%. Now, for instance, a bank like Syndicate Bank still able to grow at around 16%. So you have to choose based on these three criteria. The credit growth substantially above 10%, net NPA around 2%, and third, the valuation. If it is at a discount to the adjusted book value anywhere from 10 to 20%. So apply these three parameters and pick up 2-3 names. I am sure in next 12 months, you will make a lot of money in.
Any particular name you are looking at in the market right now?
In fact, we have been buying a Syndicate Bank right from 110. So even when it crashed a couple of days back, 87, we started accumulating more. Because for that bank, another fourth unique feature is that last year it gave 4 rupees 70 paisa dividend, and this year it is again likely to maintain that kind of dividend. It will be about 5% yield.
While we're talking about banks, Chokka, the bank we must talk about is ICICI Bank. Now, it turned its first quarter performance it seemed stable. Profit rose about 12%. The NII growth remains healthy. I remember the last time we talked about ICICI Bank, you had some concerns about the quality of the credit on its books. Given the numbers that you've seen right now, are you still concerned about the bank?
In relative terms, it is far superior to PSU Bank.
Yes.
But in relative terms, I always bet on Axis Bank. Even after these results, if you see, Axis Bank is 3 times better than ICICI Bank in terms of net NPA percentage. Even in terms of business growth, it is still growing credit around 23%, whereas ICICI Bank is able to grow only around 15%. So considering these two facts, I would still bet on Axis Bank. I believe that next 1 to 3 years, Axis Bank will create more wealth than what ICICI can create.
So if I break this down for those watching at home right now, basically if I'm looking at a banking stock, it's not just the interest income that's coming in that should matter to me. I should also be very careful about the credit growth and the quality of the assets on the books.
Certainly, because some of the PSU banks, if you see, annual profit would be 10-20% of the outstanding net NPA. Whereas if you see for Axis Bank, it will be insignificant, the outstanding net NPA as compared to the profit. So, the way you make a provision for NPA makes a huge difference on the bottom line. So, therefore, lower the net NPA and also higher the ratio of annual profit to annual outstanding NPA is better.
In case there is no rate cut at all next week, and there's some sort of a disappointment in the market, and we see banking stocks come lower, should we then go out according to your recommendation and buy Syndicate Bank and Axis Bank in those opportunities?
Certainly. My view is that market may not be disappointed. I think market is not expecting
Priced
any
it in
favor
already.
from
Okay.
the central bank.
All right. So 2 banking recommendations, Syndicate Bank and Axis Bank. I want to answer a couple of questions as well. We have a question from KP Kumar who's written in. He has 100 shares of Karur Vysya Bank, which he bought at 45 rupees. He also has, 50 shares of Adani Enterprises, bought at an average of 160 rupees. He wants to know which he should hold on to. Karur Vysya Bank, you've been very bullish on from the beginning. Hold on to that stock?
Yeah, of course, the last 6 months it has not outperformed. All the old private sector banks are going through a difficult time in terms of business growth. But still, among all the old private sector banks, this has got the best asset quality. Net NPA is comfortably less than 1%. And also, next year is the 100th year for the bank. So, this bank always gives once in 4-5 years bonus and rights. So, being 100th year, and also last bonus was in 2010, I believe that the bank will reward investors. So, one should buy at this level.
All right. So, hold on to it. And if you want to, you can buy at this level as well. What about Adani?
Adani, tactically one can hold because it has been beaten down a lot after the restructuring. And also in terms of valuation, it is available at around 6-7 PE on 1 year forward earnings. So one can hold for a nominal return of 15-20% in the short to medium term.
All right, let's also take another question. Shailesh has written in, he has 100 shares of JK Lakshmi Cement, which he bought at 317 rupees. He wants to know if he should hold on to that stock. Now, we're going to pull up that stock on your list. It ended the week around about 338. The company will announce its results on the 11th of August, and we also know that it's tied up with Snapdeal to sell its cement products online. That would be a first. How much of a difference do you think that's going to make to the company, and would you recommend he holds on to that stock?
So I won't recommend. I would suggest sell because, a commodity business like cement company buying for 35, 36 PE, I don't agree. People use EV to cement capacity. Today the cement industry is already consolidated. All the acquisition takeovers, the story is now fast. So one has to again go back to EPS only. That's my understanding. So I won't, suggest to hold. I would rather sell and buy stock like KCP Limited, which is a diversified play and making huge money in both cement as well as in sugar plant, which is set up in Vietnam. Okay. So that, and also it has got a lot of land bank. So that kind of value stock I would buy.
All right. So get out of that particular stock, get into KCP Limited. Another question from Ronak, who's written in. Ronak has 2,000 shares of DHFL, which he bought at 555 rupees. He wants to know if he should hold on to that stock. The stock is well below where he bought it. It ended the week around 481. Good set of Q1 earning numbers. Profit grew nearly 18%. Is that enough, proof for you to hold on to that stock?
You can hold on for 2 reasons. As you said, it has corrected, and second, on 1 year forward book value, it is still trading at around 1.1, 1.2 times. Whereas, comparable company like Group Finance and all trading at above 10 times price to book. So one should definitely hold this stock.
All right, hold that stock as well. And if you want recommendations on an entire portfolio, well, today is your lucky day. Chokka designed a portfolio for us on the show. This is a model portfolio that we can use in our own books as well. Now, we started this portfolio on the 8th of August 2013. So we've had it for a fair amount of time. It's currently at an overall gain of 123%. The Nifty over the same period is up 53%. So we've performed the Nifty handsomely. I'm going to give you a list of those stocks. JB Chemicals, Polaris Consulting, South Indian Bank, Genus Power, Navegli Lignite, Bombay Burma. Bombay Burma is up 192% since we bought it. Emphasis, Karur Vysya Bank, Palmolori, Moil, Biocon, KCP Sugar, Claris Life Sciences, and Tata Sponge. Now, I understand you want to make some changes in your portfolio. What would they be?
Yeah, within the last 2-3 months, we added Polaris and JB Chemical. They have given more than 30% return. So I would like to sell and add, Oberoi and LMW, MCX. These are the 3 stocks. I am also removing Navely Lignite.
Okay.
I am making losses, but the company is going through a lot of labor unrest. Ever since we added, a couple of times it has gone for labor unrest. So I would rather sell the stock and add these 3 stocks.
You're booking your profits out of Bombay Burma?
Bombay Burma also. For long-term investor, it is still hold because at Friday's closing price, it still enjoys about a 78% discount to the value of investment it holds in Britannia. But we initiated somewhere around 110 and today it's around 610.
Yes.
So somewhere I think we should book profit for the short-term investor. But if anybody is willing to take 10% risk from this level, and doesn't mind, if it falls 10%, but he wants to wait for 3 years, he can hold on to the stock.
We've run out of time and we have to take a quick break, but I'll give you a recap now as it stands. JCB Chemicals, Oberoi Realty, South Indian Bank, Genus Power, MCX, Emphasis, Karur Vysya Bank, Palmolori, Moil, Biocon, KCP Sugar, Claris Life Sciences, Tata Sponge, and Lakshmi Machine Works. Now, if you have any questions about that portfolio, write to us. Our email ID is at the bottom of your screen the next time Chokka comes in, and he does come in every few weeks. We'll ask him your questions. Welcome back. You're watching All About Stocks and ET now. Thank you for staying with us. G. Chokkalingam is with us right now, helping us to figure out a strategy for our long-term portfolios. We've asked Chokka to pick one stock that he believes makes sense at current valuations, which means you can buy it possibly on Monday morning. He's picked Coromandel International. It's in the fertilizers segment. The Q1 net profit numbers were not great. The profit was down about 60%. That would make any investor nervous. Is there a reason why you want to put this on the buy list at this point?
According to me, that is in price. Now the stock is available close to 52-week low. In fact, in the last 2-3 years, this is the lowest price point. But the fact is that this is the best managed company in the phosphatic fertilizer segment. It's the most efficient. And second, in this country, the phosphatic fertilizers are not applied optimally. It's always perennially deficit, the consumption. And third, now the monsoon, as against IMD projection of major failure, till yesterday it is a normal. The deficit is only 4%. And also this company has got 2 giant ventures to make phosphoric acid in Africa. So it has got advantage of procuring the raw material at competitive prices. So all these comforting factors are there, and therefore I have chosen this stock.
What's your target on the stock right now?
It's about 326.
And ideally, as a retail investor, how long should I hold on to this stock in my portfolio?
See, if you get target price in a year's time, do it. But in a short term itself, if you get 25-30% in 2-3 months, take it. I mean, the long term is only to make money. But if you are making money in the short term also, don't wait for the long term. So just realize it.
All right, so realize it if you do get your target. That's Chokka's recommendation for this week. I'm going to take a few more questions that you sent in. Vineet Suresh has written in. He has 4,000 shares of Tata Power, which he bought at 75 rupees. He wants to know if he should hold on to that stock. Now, the stock ended the week around 68 rupees. We know it's planning on scaling up capacity for about 18,000 megawatts by 2022. But the power sector has been waiting for, sort of a silver lining for a really, really long time. And there are a lot of investors who are now losing patience. Should he continue to hold on to Tata Power?
Yes, this is the first time I'm giving hold call on Tata Power, because on the same show several times we discussed and we always continue to give sell call. But it's so beaten down. It's around 68, 69, 1.4 times book value, and coming from a good management. So there is a possibility of, at least 15-20% rebound in the stock. And also, Mundra power plant, there is a possibility of getting some concession on the costing of coal from the government. So if these things happen, it can improve.
All right, let's take another question. Sanjay has written in. He has 100 shares of BHEL, which he bought at 250 rupees. He wants to know if he should hold on to that stock. Well, he's not losing any money. BHEL ended the week around about 278. There's a stake sale likely soon. The government is, he's been thinking about selling 5% of BHEL for a while. Now, Tell me about BHEL. Again, this is a stock that has tested investor patience for a very, very long time. Would you recommend he continues to hold on to it?
I won't recommend. I mean, maybe, whenever there is some rebound, you can use it to sell. Because if you look at the 2015 balance sheet, the inventory and receivables they are around 120% of annual sales. So difficult to manage the working capital pressure and, make money. So that is the biggest concern for me. So therefore, I would sell and buy Oberoi Realty, where I believe he can easily get 25% return in the short term itself.
All right. Suresh Kumar has also written in. He has 305 shares of Unitech, which he bought at 17 rupees. He wants to know if you should hold on to that stock. The stock ended the week at 7 rupees. Is this a stock he should have sold a long time ago?
He should not have bought at all. So, I mean, he was unlucky. But, it's even 7 rupees is sell for me. But, in this country, there is a lot of small cap stocks are in bubble now.
Yes.
And particularly if the stocks are quoting at 6, 7 rupees, there is always a tactical opportunity for some rebound. So you can use such rebound to exit. So
okay, so just watch it to see if there's a little bit of rebound on the stock and then
certainly,
because
the balance sheet is not giving any comfort.
All right. Arjit Reddy has written in. He has 1,000 shares of JP Associates, which he bought at 12 rupees. And 200 shares of Hindalco, which he bought at 113 rupees. He wants to know which of the two he should be selling. JP Associates ended the week at a little over 9 rupees. Hold on to JP Associates?
Hold on for the same reason I gave for Unitech.
For the bubble too.
You should not have bought it.
Yeah.
I don't see any future in this company. So you can hold on for some rebound. Hindalco, excellent management, but China is a culprit. Most metals, they have 50% global capacity, but their demands are not 50%. So aluminum sector is going through terrible pain and with a lot of leveraging. So I would still feel that it is a good sell and buy domestic play, that is Axis Bank, which can grow in the domestic market.
So stay out of all metal sectors you're saying right now. Just avoid those stocks and stay with more attractive sectors.
No, in underperforming sector also there are some exceptions, like Hindustan Zinc. It's still growing and high margin. Of course, there is only issue on the management after this Kane India episode. Otherwise, you always try to find some exception and a little bit of exposure you can have. Because when sector turns around, the efficient player who survived in the tough time will give you enormous reward. So therefore, look for such a place in the underperforming sectors.
All right, that's interesting advice. In any underperforming sector, look for the market leader, one that survived the bad times. Welcome back. You're watching All About Stocks in ET now. Thank you for staying with us. G. Chokkalingam is still with us, helping us figure out our strategy for our long-term portfolios. It's time to take a look at your portfolio. Well, our lucky viewer this week is Narsimha Reddy. He sent us a list of all of his stocks, Chokka. He wants us to help him decide which of these stocks he should be holding on to. Right on top, he has 60 shares of Infosys, which he bought at 995 rupees. I mean, Infi is a great stock because if you look at the numbers and all of the doubts that people had about Infosys seem to have been laid aside given the numbers that we heard this quarter. But my question to you is this: how much more can we expect from the IT sector going forward? If we were to sort of taper our expectations, would that be better as investors?
Certainly. As I said earlier, for the first time, the IT sector is facing trouble from two areas. One, the slowdown in the Europe, and two, also, from oil producing countries. The second factor is the arithmetic limit to the base. So therefore, they are now struggling to grow in double digit in dollar terms. So you have to cut down your expectation. Still, one can hold on Infosys because of the new management, which can work for increasing the market cap of the company. And two, the Fed, as and when they hike, there could be little stress on the currency. So therefore, you can hold on to Infosys.
What is your expectation from Infosys in terms of returns on stock investment going forward?
I mean, if you make around the average 15%, that itself will be great. Because it has run up also in the last 14 months in a very big way.
All right. Well, the next stock on the list, 20 shares of Sun Pharma, which he bought at 850 rupees. The stock ended the week at 822. Sun Pharma is also a great stock. He might have bought it at a peak, though. What's your recommendation on Sun Pharma?
You can hold on because for the pain of the merger of Ranbaxy, it's built in the price now. It is corrected, so one can hold on. I believe that the management known for efficient running a pharma company, so they should be able to resolve the problems of Ranbaxy, and therefore I would suggest hold.
All right, next, this is the interesting one, 70 shares of SBI, which he bought at 268 rupees. Now, we've gone back and forth in this whole PSU bank story so far on the show. As far as SBI is concerned, do you recommend we hold on to it?
I would sell and buy a stock like Biocon, which of course has not been performing well. But there are 3 triggers in Biocon. Syngene has gone for listing and oversubscribed more than 30 times. That's likely to get listed at a premium. So at the offer price itself is around 45% of the current market cap of Biocon. And second, Biocon commission plant in Malaysia for about 1,000 crore they invested. And third, the management is bullish on oral insulin pill.
100 shares of Inox, which he bought at 150 rupees. That stock ended the week at 231, if I'm not mistaken. So he's making some money there. Hold on to Inox?
Hold on, because difficult to find a growing sector or growing companies. So though it is at premium, better to hold on to the stock.
Well, I almost know what your recommendation is going to be on the next question. He has 20 shares of Yes Bank, which he bought at 860 rupees. Hold on to Yes Bank?
Yeah, certainly. I mean, valuation-wise, it is still cheaper as compared to bank like IndusInd Bank. Net NPA, gross NPA, they are one of the lowest in the industry. So one should hold on. Hold
on to Yes Bank as well. Last stock on the list, 20 shares of Just Dial, which he bought at 1,081 rupees. Hold on to Just Dial? Yeah, it's already corrected 40-45% for the growth it's showing now. So it's already priced into low growth. So one should hold on. Anything you would like to add to his portfolio? Only the comment is that he has got only 6 stocks in the portfolio. And he has got as much as 40% of the portfolio in single stock. These are all very dangerous. Yes. Same Infosys, if you remember our 14-16 back, in a few weeks it fell by 32%. So he should add more stocks. Roughly, you should not have more than 10% for single stock, So if he were to add more stocks at this point, what would you recommend he adds in terms of sectors and stocks? I would suggest, diversify by adding Coromandel, Lakshmi Mission Works and Wobrai. The one common thing for all these 3 stocks, good balance sheet, good management, all are close to 52-week low. Because now that is also very important. As I said, there is a really bubble in many individual stocks. So this is the time to look at, the valuation comfort zone. Before I let you go, I'm going to ask you one more question about SBI. You did recommend that Narasimha sell SBI. What about the rest of us who are holding SBI in our portfolios? Sell SBI, exit it right now? It's a relative call. I firmly believe that, Biocon can do better than the PSU bank like SBI. So I would suggest shift from SBI to Biocon because of this particular event. But the interesting thing is that SBI could have been a core portfolio holding. Can Biocon take that space? But if you look at over the last 3 years, 5 years, 10 years, the kind of wealth created by Axis Bank, S Bank, there is no comparison from the PSU segment. From 2010 level, most PSU banks, if you will be surprised, like Andhra Bank, if you recall, it was around 260. Now around 70, whatever, 75 level. So that is a typical performance of the PSU banks. Whereas whatever time frame you take, the most efficient bank, private banks like Axis, Yes Bank, create a phenomenal wealth. So therefore, if you want to create a long-term wealth, this is not the right choice. That's my view. It's time to relook at our entire PSU bank holding. If you have questions about the stock that you're holding, write to us. Email ID is at the bottom of your screen. A copy of this entire show will be available on our Facebook page, and you can reach me on Twitter. Chokka, I'm required to ask you for your disclosure for the stocks we just talked about. I hold Karur Vysya, but also I hold in our old portfolio stocks like Balmalari Company, Moil, so Neyveli Lignite. So many more stocks I hold. I mean, all are bought with a due compliance process without any conflict of media complaints or research complaints. All right, that's a wrap on the show. Thank you so much for spending time with us this week. Stay with ET now. Write to us. It'll be our pleasure to hear from you. Thanks for watching.